Hand me your debit card, sir. That sentence sounds like something from a movie, until it's your phone ringing at 7:06 a.m. and a calm voice says there were withdrawals you don't recognize, and your stomach drops because you already know exactly where that money came from. Not a credit line, not a pending charge. The actual cash sitting in the same checking account where your Social Security deposit lands every month. The account that pays your rent or mortgage, your utilities, your insurance premium, and the prescriptions that keep you stable. And here's the cruel part that almost nobody explains to seniors in plain English. Fraud protection usually doesn't stop the money from leaving first. With a debit card, the money can be gone before you finish your first cup of coffee. Then the investigation begins, then the paperwork begins, then the phone calls begin. And while all of that is happening, your bills don't pause. Your life doesn't pause. Your landlord doesn't pause. Your pharmacy doesn't pause. Your body doesn't pause. Stress hits your nervous system, and suddenly you're trying to solve a financial crisis while also trying to keep your blood pressure down. Today, I'm going to show you why debit card fraud hits retirees harder than almost anyone else, what the federal rules really say about your rights and your timelines, and the simple account setup that financial professionals quietly use so a stolen card number can't touch the account where their retirement income lives. Please stay with me, because the number one hidden secret near the end is something most banks will not volunteer unless you ask directly, and it can prevent a fraud incident from turning into overdraft fees and bounced payments on top of the theft. Before we go one sentence further, comment your age and your biggest struggle right now. Is it prescriptions, rent, groceries, utilities, caregiving, or scams and fraud? Just write 71 scams, or 68 prescriptions, or 74 rent. I read these and it tells me what to cover next. And quick disclaimer, this is general education, not legal advice or individualized financial advice. If you're dealing with an active fraud situation, contact your bank immediately using the number on the back of your card and consider reporting identity theft and fraud through official channels. Now let me address the 3 reasons most people watching will assume this doesn't apply to them, because those assumptions are exactly what scammers and skimmers count on. The first assumption is, I check my balance so I'll catch it fast. You might catch it fast, but what you're catching is the aftermath. With a debit card, the loss can happen at night, on a weekend, while you're asleep, while you're at church, while your phone is on silent. You can be the most attentive person in the world and still wake up to a drained account, because the event is instantaneous and your attention happens afterward. The second assumption is, my bank has fraud protection, so I'm covered. Your bank does have fraud processes, but covered often means you'll be investigated and made whole according to the rules if you report quickly and follow the steps. It does not always mean your money is put back immediately in your account before your mortgage hits. Under federal rules for electronic fund transfers, banks must investigate, and there are timelines. In many cases, if the bank needs more time than the initial window, they generally provide provisional credit while they finish the investigation. But that credit can depend on factors like when you reported, whether you provide required information, and whether your account is new. The practical truth is still the same. Debit fraud creates a cash flow emergency first and a resolution second. And seniors live on cash flow. That's the entire point of a fixed income. When the flow breaks, the damage spreads. The third assumption is, I don't shop online. I only use my card in person at places I trust. That one hurts, because it's the most common and it's the most outdated. Card skimming is often a physical attack. Gas pumps, compromised terminals, tampered ATMs, and situations where your card leaves your site can all be risk points. You can be in the nicest neighborhood and still be exposed, because criminals don't need to rob you face-to-face anymore. They just need your card data once. Now here's the part that almost never comes up in a friendly conversation with your bank. Banks have incentives for you to swipe your debit card. Merchants pay processing fees, and the system is built around convenience. But convenience is not the same as protection. And when you're retired, protection matters more than ever, because you don't have the same recovery engine you had at 40. At 40, you might replace lost money with overtime, a bonus, extra shifts. At 70, your money is your money. It's meant to last. So let's get very clear about the single most important difference between a debit card and a credit card, because once you understand this, the rest of the video will click into place. With a debit card, the money comes out of your checking account. With a credit card, the charge goes onto the card issuer's line and you dispute it before any money leaves your bank account. That difference sounds small until you live it. With debit fraud, you can lose access to your grocery money, your rent money, your prescription money immediately. With credit fraud, you're usually disputing a charge, not losing your cash balance. The federal protections are also different. Debit card and bank transfer issues are generally governed by the Electronic Fund Transfer Act and Regulation E. Credit card billing disputes are generally governed by the Fair Credit Billing Act. The details matter, but the big picture is simple. Different laws, different timelines, different real-life outcomes when something goes wrong. Let's talk about those timelines in plain language, because this is where seniors get hurt by delay. For debit cards, how quickly you report an unauthorized transfer matters. Under federal rules, if you report your debit card loss or unauthorized transfers within a short window after learning about it, your maximum liability can be limited. If you wait longer, your potential liability can increase, and after a longer period, you can be responsible for additional unauthorized transfers that occur because you didn't report in time. This isn't me trying to scare you. This is me trying to protect you from the most common mistake seniors make. They notice something off, they wait because they don't want to bother anyone, and that waiting can cost real money. Now, I want to make this real with a story. I'm going to call her Patricia. Patricia is 67. Her Social Security hits on the 3rd of the month. She's careful. She uses her debit card for groceries and gas. She doesn't buy weird things online. She doesn't respond to scams. One Saturday morning, she gets a text alert from her bank, a charge in another state. She thinks, that's strange, but she's at a family gathering and she doesn't want to cause a scene. She tells herself she'll call Monday. By Sunday night, there are multiple charges. Her account drops below what she needs for her automatic rent payment. Monday morning, she calls the bank, reports fraud, and a case is opened. The money eventually comes back, but what Patricia remembers is not the fraud itself. It's the week of collapse around it, returned payments, late fees, embarrassing calls, the feeling of being unsafe in her own life. She told me, I felt like I couldn't breathe until it was fixed. That is what debit card fraud does to seniors. It attacks your sense of stability. And here's what makes that stability so important. Older adults often have more automated payments than younger adults. Medicare premiums, supplemental insurance, utilities, phone service, rent, property tax payments, prescription delivery subscriptions. Automation is supposed to make life easier, but when your checking account gets drained, automation becomes a machine that keeps trying to pull money that isn't there, and the fees stack like dominoes. Now, I want you to hear something hopeful, because this video is not here to leave you afraid. There is a simple protection strategy that can change everything, and it does not require being a tech genius. It doesn't require a special bank. It requires one decision. Stop letting the card that touches the world be connected to the account where your income lives. This strategy is called account separation, and it's so simple that once you understand it, you'll wonder why nobody taught it in retirement classes. You keep a primary account where your Social Security deposit lands and where your bills are paid. That account is sacred. It doesn't get swiped at gas pumps. It doesn't get typed into shopping websites. It doesn't get handed to a server who walks away with it. It is the vault. Then you have a second account, a spending account with a separate debit card. You move a set amount into it weekly or bi-weekly, whatever your budget allows. That spending account is what you use in the real world. If it ever gets compromised, the maximum damage is the limited balance you place there, not your entire monthly income. And I want you to keep listening because in a moment, I'll explain how to do this in one phone call, and I'll also explain a safer variation that many seniors can use even without opening a second account. But first, let's build the suspense honestly. Why don't more people do this? Because the default setup most banks give you is one checking account and one debit card, and nobody walks you through the risk. They market convenience, and convenience is fine until a skimmer hits you at midnight. Now, this is where I'm going to ask you to help this channel reach the seniors who need it most. If this is already making you think differently, tap like, subscribe, and stay with me for the #1 secret that can stop overdraft fees from piling on during a fraud incident. It's an opt-in/opt-out rule most people don't even know they agreed to, and it can protect your account in a very real way. Now let's talk about the better than a spending account option, using a credit card for daily purchases and paying it off in full on purpose every month. I'm not telling you to go into debt. I'm not telling you to carry a balance. I'm talking about using the stronger fraud dispute structure of credit cards while keeping your checking account insulated. When you use a credit card at a gas pump, you are not directly exposing your checking account number and cash balance to that terminal. If fraud occurs, you dispute a charge rather than losing cash you need for rent. I know some of you are thinking, I don't want a credit card. I don't trust myself. I don't want interest. That is a valid feeling and you should respect it. In that case, the two-account debit setup is your best friend. The principle is the same. Build a wall between income and exposure. Let me give you a second story because I want you to see the transformation this creates. I'll call him Walter. Walter is 72 and he's the kind of man who has always paid with debit because he hates debt. Walter got hit by a skimmer at a pump. The bank eventually returned the funds, but Walter spent a week with his stomach in knots. After that, his daughter helped him set up account separation. His Social Security deposit went to the primary account, bills came out of that account, and every Friday, an automatic transfer put $250 into the spending account. Walter kept his debit card habit, but he made it safer. 2 months later, another attempted fraudulent transaction hit his spending card. It was declined because the account had a low balance and a lower spending limit. Walter didn't lose his rent money. He didn't lose his prescription money. He didn't lose sleep for a week. He told me, I finally feel like I'm not one swipe away from disaster. That is the emotional benefit we're chasing. Calm. Now let's discuss the number one hidden secret, because it's one of the most practical protections for seniors, and it lives inside a federal rule many people have never heard explained. Banks generally cannot charge overdraft fees for ATM and one-time debit card transactions unless you have affirmatively opted in to that overdraft coverage. That means if you did not opt in, those transactions should be declined rather than paid into overdraft with a fee, though declined transactions can still create merchant issues and you need to manage it carefully. But here's why it matters. Many seniors have opted in over the years without remembering, often in the fine print when opening an account or clicking yes to a prompt. During a fraud incident, overdraft coverage can turn a drained account into a fee machine. Fraud drains money, then automated payments and card attempts trigger overdrafts, and suddenly you're paying fees on top of being a victim. The hidden move is to call your bank and ask one direct question. Am I opted in to overdraft coverage for ATM and one-time debit card transactions? And if so, I want to opt out. When you opt out, the system is more likely to decline those transactions instead of approving them with a fee when funds aren't available. This can reduce the secondary damage of fraud. It doesn't replace reporting fraud. It doesn't replace monitoring. But it can be the difference between one incident and a chain reaction. Now, I need to say this carefully. Overdraft rules and how banks apply them can be complicated, and you should ask the bank to explain what will happen if you opt out so you don't get surprised by declines. But as a protection against fee cascades, this is one of the simplest questions you can ask. Now we're going to make this even more powerful by bringing in synergy, because seniors don't live in one system. You live at the intersection of Social Security, Medicare, utilities, housing, and food. When fraud hits your bank account, the immediate danger isn't just money stolen. It's the domino effect: missed insurance premiums, interrupted medications, late rent, and utility shutoff notices. That's why I want you to have a backup plan that goes beyond call the bank. If fraud ever freezes your cash flow, you should know what emergency supports you can coordinate while the bank resolves it. If you're eligible, SNAP can stabilize food quickly. LIHEAP or local utility assistance can help prevent shutoff during a crisis. Many counties have emergency rent help or senior services through the Area Agency on Aging. If your medical costs are tight, Medicare savings programs and extra help can reduce monthly healthcare expenses going forward so you're less vulnerable to future shocks. And property tax relief programs for seniors can reduce one of the biggest annual bills that pushes retirees into fragile finances. This is not about collecting programs like trophies. This is about building resilience so one bad event doesn't wreck your whole month. Let me tell you the third story, because it shows what resilience looks like. I'll call her Nancy. Nancy is 69 and she lives on Social Security and a small pension. She had debit fraud drain her account. She handled it correctly. She called her bank immediately, changed her card, and filed the report. But she still had a week of chaos. When it was over, she did two things. First, she set up account separation. Second, she did a benefits checkup and found she qualified for help lowering prescription costs. Her monthly out-of-pocket dropped, and she built a small buffer in her primary account for the first time in years. Nancy told me, "I stopped feeling like I could be knocked over by anything." That is what we want, not just recovery, but stability. Now let's get very practical and walk through how to set this up without stress, because I know the idea of calling your bank and changing things can feel overwhelming, especially if you've banked the same way for decades. You call the customer service number on the back of your card, or you go into the branch if you prefer face-to-face. You say, "I want to keep my main checking account for deposits and bills, and I want a second checking account for daily spending with a separate debit card." Then you ask them to set up an automatic transfer from the primary account to the spending account, weekly or bi-weekly, whatever fits your routine. It might be $200, it might be $300, it might be $500. The exact number is not the magic. The wall is the magic. Then you do one more critical step. You make sure your automatic bill payments, rent, mortgage, utilities, insurance, phone, are linked to the primary account, not the spending account. The spending account is for groceries, gas, and everyday purchases. The primary account is for income and stability. While you're on the phone, you ask for 3 protective settings. First, real-time transaction alerts for both accounts. Not a daily summary. Real-time. A text or push alert every time the card is used. Second, ask if they can lower the daily debit card spending limit on the spending account. Limits vary by bank, but the idea is to cap the damage if fraud occurs. Third, ask the overdraft opt-in question I mentioned. Am I opted in for overdraft coverage on ATM and one-time debit card transactions? If yes, I want to opt out. And then ask them to explain clearly what that means in practice so you aren't surprised. Now, I want to address the highest risk place seniors use debit cards in daily life: gas pumps. Pump skimmers have been widely reported by consumer protection agencies for years. The safest move is simple. Don't swipe your debit card at the pump. If you can, use a credit card at the pump or go inside and pay. If you must use debit, use the spending account card, not the primary account card, and pay attention to anything that looks tampered with. And if an ATM or terminal looks loose or different, walk away. Your pride is not worth your paycheck. Now let's pull all of this together, because I don't want you leaving this video with a dozen worries. I want you leaving with one clear plan. Debit card fraud hits retirees harder because it can drain the exact cash you need to live, and because the damage spreads into fees, bounced payments, and stress while investigations run. The legal protections for debit and credit are not the same, and timelines matter. The most powerful protection is separating the account where your income lives from the card that faces the world. Add real-time alerts, lower limits where possible, and review your transactions regularly. And ask the hidden question about overdraft opt-in, because it can prevent fee cascades when things go wrong. If you want, share this with one person who still has their Social Security deposit and their everyday debit swipes running through the same account. That one change, one wall, can prevent the kind of midnight drain that turns a normal month into an emergency. And I want to end with this, because some of you have been living with a quiet fear you don't talk about, the fear of becoming financially fragile. The fear that one scam, one skimmer, one mistake could unravel everything you worked for. But here's what I've seen again and again. Seniors are not fragile. Systems can be fragile, setups can be fragile, habits can be fragile. You are not. When you learn the rules and you put a simple structure in place, your confidence comes back. Your sleep improves, your body relaxes, you stop feeling hunted by your own checking account. So comment your age and biggest struggle, and if you decide to set up account separation or opt out of debit overdraft coverage, come back and type "done." You're not behind, you're not alone, and you still have options to protect your money, your health, and your peace.